All right, ladies and gentlemen, this is day 3, the final day of our virtual trading workshop or our virtual trading summit. And you know what? We just cannot close out any better than with the person that we have is going to be sharing some gems and some nuggets on tonight. And that is Mr. Gustavo Alanis. Guys, you all know him as Wealthy Pips. Maybe you didn't know that he was Wealthy Pips. Some of you guys are newer to the community and you haven't really been able to put a name or a face with the alias name. But really fast, I remember, Gustavo, we met back at what we were in Vegas, I believe. Where were we in Vegas? I don't remember what event. Houston?
Oh, Houston.
We were in Houston, and it was an event, and I forget. Oh, it was Paulette, and Paulette introduced me to you, and it was Starboy, but he wasn't even on Swipe Trade's team at that point in time. And you guys were sitting together, and Paulette said, "Man, these brothers, they're doing good. They're making like $1,000 a day, and they're only like in their early 20s." And this was my very first event ever. I'm like, what? So we took a picture, we got a video, they had money all on the thing, right? Having a good old time. And then lo and behold, she goes, "But do you know who that is?" And I'm like, "No." She's like, "That's Wealthy Pips." I said, "That's Wealthy Pips? He too young to be Wealthy Pips," right? And so ever since then, we took a picture and then we connected on Facebook, and you know, we'll just kind of chit chat here and there. And so when we had the idea of doing the virtual trading summit, I knew, Gustavo, we couldn't do it without you. And I really want to thank you for taking some time to share with our community just some nuggets, some gems, some things that go on that they might not see because you're Swipe Trade's team, and you know how you think and all that good stuff. So I know you know what you're doing. So what I'm going to do, I'm going to hush. I'm going to turn it over to you and let you lead the charge.
Okay, thank you, Ms. Tracy. I really appreciate it. Really, really appreciate it. First things first, thank you for everybody that's on this call. I understand, you know, your time is valuable just like me and Ms. Tracy's. And I just want to thank every single one of you guys for getting on this call. For you guys that don't know who I am, you know, my name is Gustavo Alanis, 23 years old, from New Orleans, Louisiana, born and raised. And, you know, a little background story about me might change your perception, might change the way you look at IML or even trading as a whole. But me, at age 18, I dropped out of high school, right? I left high school because school just wasn't for me personally. And the thing with me, you know, I always was a hustler. I had an entrepreneurial mindset at all means, but I never found the niche, right? I never found what worked for me. And, you know, from age 21, I went through 21 plus jobs, literally. Fast food, you name it, but never worked at McDonald's, right? I worked fast food, hard labor, you name it, I've done it. And what I realized at the time is that I was really just working hard for a dollar bill, right? And what really made sense to me at the end of the day was this concept and the fact that people were trading their time for a dollar bill. And literally, you know, I heard about this concept 3 years ago while working at AutoZone, selling car parts, meaning I hated my job, right? I did not like my job. Blood, sweat, and tears, helping people, you know, change tires, you know, change batteries. It was something that, honestly, I was working so hard for, but I wasn't getting paid the right amount of money at that moment, if that makes any sense. And, you know, I heard about Forex, and while trading Forex and working at AutoZone, I took this concept really so serious that I ended up taking it to the moon, that in a matter of 4.5 to 5 months, right? This is true story, guys. 4.5 to 5 months, I walked away from my 9 to 5 and literally started making way more money trading than I did working at AutoZone. And then literally in less than a year, went and made a 6-figure income with no intention trading the Forex market. So my intention was to give, right? If you're somebody on this call right now and you're a giver, drop a number 1 on the chat, because I believe that if you're a giver in life in general, the blessings and everything else is going to keep, you know, it's going to rain on you eventually if you keep consistent with giving people. And that's what happened here, you know, with the whole concept of trading Forex. I was giving free trades, free webinars, free educational webinars. I was literally flying out to people's houses, sleeping on their floors, teaching people how to trade for literally $0. And as you guys know, every single day in this niche, they have people that try to sell you trainings. They try to sell you right? Educational courses that literally make no sense. And me, you know, I had the intention to give and give and give and give to the point where Mr. Christopher Terry gave me a call almost like a year and a half ago, and he saw what I was doing. And I'm over here like, Christopher Terry, on my phone, what are you doing calling my phone? I'm curious. You're making 9 figures. You have a multi-million-dollar company. What are you worried about me for? So he generally, you know, had a conversation with me, got to know him in a matter of like 20, 30 minutes, and he offered something he put on the table that I couldn't say no to. You see, I'm not the type of person that does stuff for the money. I do it for the people. And I looked at myself like, well, Gustavo, if you can give signals to a few hundred people in a group chat, why not give signals to over 75,000 customers, right? At the same time, it was kind of like a test for me, right? Kind of like, you know, if you're a so-called good trader, how about we put him to the test? And that's what happened. I got put to the test, and literally, you know, I literally put numbers on the board with swipe trades. If you guys remember, around this time last year, like it was 3-4 months straight, literally 50, 100 pips every single day, just because, you know, it's a different time of the season when it comes to the market. And, you know, I've been able to really just mold myself as a trader the past 3 years of really just taking this whole concept serious. And as you guys know, trading Forex is a process, right? And that's why Miss Tracy got me on this call today to give you guys my insight. And what I'm going to do, since me and Miss Tracy are real cool, it's crazy how we met and the relationship we built. I'm not going to hold back at all. I want to be able to give you guys the A1 steak sauce of what I delivered to my team every single day, right? So what I want everybody on this call to do, if you do not have a pen and paper, I'm going to give you guys 60 seconds to get some pen and paper. I'm going to share my screen. At the same time, I'm going to break down a little bit of charts for you guys. So I hope you guys are ready to take some notes. So as diving into it, right, guys, when it comes to trading, right, when it comes to trading, we all know that it's psychological, right? 90% mindset, right? 10% of the actual technical analysis. And when I say technical analysis, let me show you guys right here. I'm showing you technical analysis by what? Drawing up a certain chart, right? This is all technical analysis, right? Trend line, support and resistance, Fibonacci, whatever you want to call it, right? Before you even start drawing up any charts, before you even start deciding you're going to sell or buy whatever commodity or even currency pair, there's certain things you have to understand before even entering the market, right? And we all know it starts with mindset. What I'm going to do, I'm going to share the 3 keys with every single one of you guys, right? I want you to write this down. The 3 major keys that help me go from 0 to 100, that help me go from auto zone to now in the zone. Does that make sense? All right. So with that being key number 1, ladies and gentlemen, write this down. I'm actually going to write it on the screen as much as possible. All right. Key number 1, okay, is trust the process. Some of you guys probably follow me already and have probably heard this, right? And this is the thing. Like I said, I never hold back. I always am going to deliver and give you guys all the info that I share with everybody. So trust the process, right? From me starting working at AutoZone, right? I remembered and told myself, in order for Gustavo to quit his 9-to-5, in order for me to go make a 6-figure income, in order for me to go help, you know, whoever it is financially, I had to trust the process. From the second I woke up every single morning to go into work, right? From the second I clocked out to go on my lunch break, from the second I clocked out from leaving that shift for the day, I knew that I had to trust the process, because one day I was going to walk out of that place and it was going to be the last day I was ever going to walk in and walk out of that place. And I told myself, regardless of my brother, my sister, my cousin, my auntie, my uncle, my grandma, my grandpa, if they don't believe in me, it's okay. But I have to understand that I have to trust the process that I'm going through, right? So guys, if I could tattoo this on everybody's forehead right now, trust the process, I would. So repeat after me. You don't have to say it out loud. Trust the process, right? Guys, that's very, very key, because this is the thing. A lot of people have, right, the gambler mindset, right, when it comes to trading. And that's totally fine, because people look at it as, oh, I'm risking this, I'm scared to do, okay, that's fine. but you need to trust the process at the end of the day in order to get over those risk factors, right? So key number 2, right? We're going to get a little bit more technical with this, right? Is know what you are trading. Know where you're trading, ladies and gentlemen. Why is that important? Just because Wealthy Pips sends you a swipe trade to buy Euro USD does not mean you buy it on a standard lot. Does not mean you enter the market immediately. I know at the end of the day, there's some people that do put respect on my name and do not question my analysis. But me, myself, yes, Mr. Wealthy Pips, Gustavo Alanis, I am telling you right now, ladies and gentlemen, you need to know what you are trading, right? You need to know the currency pair we're looking at, right? As you guys know right here on the left side of the corner, you have all the different currency pairs in the market, right? So if we're sending, whether it's me or anybody on a swipe trade scene, we're sending you guys these trades, you need to know what currency pair you're looking at. Why? Because it's very important to know not only the currency pair, but also to know what times you are trading. So just as you know what you are trading, right? Key number 2 is also going to involve know the time zones to be trading, right? We all know the time to trade. Okay? Know the time to trade. We all know there's different sessions, right? London session, New York session, right? Asia session, right? If you're looking at Euro USD and it's 5 or 6 o'clock in the afternoon, ladies and gentlemen, why are you going to get into Euro USD when it's 5 or 6 o'clock in the afternoon? Why? Because you think it's going to go up, because you think it's going to go down? Put into perspective. You look at the chart, right? If I was to pull up Euro USD right here, let's see. Just for example, okay? New window, okay? Just to show real quick. Okay. Okay. You look at Euro USD and it's 5 o'clock in the afternoon and you see this type of movement right here, right? Just consolidating, right? Just movement up and down, up and down, up and down. Why would you enter on whatever currency pair that is in the afternoon time when 1, it's not that time for that currency to move. 2, there's no volatility. There's no volume in the market, right? Why enter the market? Because you think it's going to go up or down. Look at the times you trade, ladies and gentlemen. After New York session at 11 o'clock in the afternoon, my time on the West Coast, after 11 o'clock a.m., which is 2 o'clock Eastern, that's what happens. What happens at that time? The market closes. The US dollar becomes less volatile, right? Because it's safe to say in the morning when we trade Euro USD, it's safe to say that the US dollar would be more volatile, right? So if we trade Euro USD in the morning, right, it's safe to say that if the dollar increases in volatility or increases in power, it's going to do what? It's going to drop. Now, if the dollar decreases, right, loses strength, that means the euro is going to go up. So put it into perspective. Know the time zones you're trading, ladies and gentlemen. I'm not going to trade the Australian dollar and the US dollar at 5, 6 o'clock in the afternoon. I'm just not. I'm going to trade US dollar pairs in the morning for New York session. If we're going to trade the Euro USD and we trade it at London, what is more likely to have more volatility, more power? The euro or the US dollar? The euro. Because why? The London session opens at 12 o'clock my time, 3 o'clock Eastern. And it's safe to say when that session opens, that what? The economy that's all across the world, right? People waking up, going to work, right? There's a lot of money being moved around. So it's safe to say that the euro would be more likely to have more strength, more volatility. So understand that if any swipe trader, it doesn't even matter, even if you're in Miss Tracy's team and there's somebody that's an experienced trader, guys, don't ever feel the need to jump in a trade immediately. Look at the currency pair, right? Know exactly what currency pair to trade, and then look at the time. If somebody's telling you to buy Euro USD at 5 or 6 o'clock in the afternoon, don't do it. Just don't do it. You're hearing it from me right now, right? There's master traders, and I'm not going to say their names. I'm just going to keep it real with y'all. There's master traders that have told me, hey, Gustavo, sell GBP, JPY. And I'm like, I'm okay. I go look 12 hours after, it went the opposite way, right? And what happens when we take other people's trades? What happens? We point the finger at them. We're like, oh, I lost money because of you. Why not? Why do that when you can lose money because of yourself? Does that make sense? Take your own loss and you feel more better about it and you learn more about it. Instead of like, oh, I took a signal from this guy, I took a loss and I can't even figure out why I lost. Does that make sense? So know the times you're trading, right? It's very, very important. Know the sessions. New York in the morning, London session at night, okay? As I move on, the last key, the last but not least key that I share with everybody all over the world in my trainings is the most important one. Some of you guys might lack it, and it's okay because it's part of the process, right? Proper risk management, right? Ask yourself, am I risking what I have or am I risking what I don't have? Are you coming in, right, with the right mindset, knowing that at the end of the day, yes, you have to risk the biscuit, right? You have to risk it in order to get the biscuit. Yes, we know that. But are you using proper risk management, right? There's a difference between risk management and then proper risk management. That makes sense? I can use risk management or I can use the proper risk management for my account. You guys check this out. Pull out your phone right now. Do it with me. Go to your MT4, right? You go to your MT4, right? You click the button all the way to the right. Whose name do you see right there? You see your name. You see my name, Gustavo Alanis, live account, real account. Whose money are you trading, ladies and gentlemen? You're trading your money. You're not trading Christopher Terry's money. You're not trading my money. You're not trading Miss Tracy's money. You're trading your money, right? So that's the thing. After you look at the name, go look at your balance on your account. If you know you're not using proper risk management, look at your balance and humble yourself. I don't say that in no way, shape, or form, negative-wise, just to give you a reality check, ladies and gentlemen, because without proper risk management, there's not going to be no Forex trading. If you don't know what you're risking, you're going to have a hard time trading Forex. Why is it that people get excited and emotional about how many pips they're going to catch, but they don't get excited they don't get excited or even know how much they're willing to risk to catch that whatever 30, 50 pips, right? You probably have somebody in the chat, oh, we're about to catch 50 pips, we're about to catch 30 pips. All right, awesome. How much are you going to risk for that 30, 50 pips? And that person sits there like, I don't know yet. So before even thinking, oh, I'm going to catch this trade, I'm going to catch the buy, I'm going to catch the sell, look at your risk factor. Look at your setup, right? Then look at your account balance. Then do some math, right? 0.01 for every $100 in your account. That's how I see it. 0.05 for every $1,000 in your account. That's how I see it. Understand at the end of the day, my account size might not be your account size. Your account size might not be my account size. But what you are trading at the end of the day is your own money, ladies and gentlemen. We're not holding a gun to your head telling you drop a standard lot on wealthy pips as trade. Why? Why would I do that? So what if it does go your way and you catch 50 or 100 pips, you make $500, $1,000? You did it in a sense to be very risky. Why do it in a sense to be risky? Because your emotions are playing a big role in that. You don't want to be emotionally tied to trades, guys. How many people on this call can generally say that they've been emotionally tied to a few trades? Right? Raise your hand, right? A few people. That's totally fine. It's totally fine. Guess what? I still, to this day, I still deal with emotions, right? Trades in profit. I'm up a few thousand and then it goes down. I'm like, oh, come on, man. You know, we still go through the whole emotional process. Nobody's perfect. I'm not perfect. But what I do understand is proper risk management, right? Knowing what I'm risking. Not only knowing what I'm risking at the end of the day is knowing that my account size, right? Knowing that my account size is where it's at right now because of the proper risk management I'm using. They say, do you rather take $1 million for the next 90 days or would you rather take a penny that doubles in value? Take a penny that doubles in value. Why not focus on compounding your account with Miss Tracy, with Swipe Trades, right? with Lex Waves in the morning, with Christopher Derrick for London session. Think about, see, some of you guys are probably like, wow, he's naming all these sessions I've probably never been on. Guess what? It's time to get on those sessions, because you start compounding your account, right? You're looking at certain setups that Christopher Derrick's giving out, and you look at it for yourself, and then you end up catching some pips with his trades, and then you go on swipe trades, right? You might take a L, right? Because this is that happening. Then you take another trade, and then it builds your account up, right? All it is at the end of the day, guys, is the compound effect, right? How many people have read that book by Darren Hardy, The Compound Effect? One of the best books I've ever read in my life, right? His life took a big toll after he started doing certain amount of events, right? He started doing this, started doing that, and then what? It compounded to a whole different life that he was living. And that's the thing, guys. You have to be able to focus on compounded growth, right? Focus on compounded growth at the end of the day, because if you don't understand that with trading is going to take time and patience to get your account from 100 to 1,000, 1,000 to 10,000, you're going to have a hard time working this, okay? So in order to get your account from wherever you want to, right, you have to do what? One, you have to trust the process, right? You have to trust the process. You just have to. Some of you guys are probably going to hear this over and over. You'll be like, man, trust the process. You're probably just going to keep on saying that forever, because I want to embed that in the back of your brain. Trust the process. Trust the process. Trust the process. Two, in order to get that account from 1,000 to 10,000, I need to know what I am trading, right? I need to know these currency pairs. I need to know what time they move, and I need to know what time zones I should be trading, right? To get that account from 1,000 to 10,000, I need to also use proper risk management. I need to risk what I have, not what I don't have. Why is it that, like I said, so many people know how many pips they want to catch, but they don't know how much they're willing to risk to catch that whatever amount of pips they want, right? You probably have a lot of people in your group chat get hyped up about catching pips, right? They say, oh, I'm going to catch 50, 100, but they never know how much they're willing to risk. Be that person today with Miss Tracy's organization to know how much you're willing to risk, ladies and gentlemen. All right? 3 keys: trust the process, know where you're trading, and last but not least, proper risk management. I hope you guys took that down, right? Those 3 keys, right, are very important keys that help me get from where I was back in the day to where I am today. All right? Those are 3 keys that help me get to where I'm at today. So what I want to do, I want to break down some charts for you guys. I'm sure some of you guys have probably never got on a session with me. Right now, I'm actually in the process of wanting to get my own IML TV channel, but I got to keep bugging Mr. Terry about it. But don't get it twisted, guys. I can teach the Forex market. I can mark up charts. I can do the whole 9 yards. But what I want to show you guys here is exactly simple stuff that could just make things a lot more better for you, if that makes sense. So people ask me, Gustavo, how do you mark up your charts? Yeah, my pip talk, you know, it's crazy. The whole, the IML TV Educators Telegram, I literally have about 100+ people asking me for my channel. So everybody that's in the Educator Telegram, they keep on telling us to hold on. So we'll see. Hopefully they drop it this week. Hopefully. So people ask me, Gustavo, how do you mark up your charts, right? How do you look for those opportunities in the market, right? How is it that you're marking up all these charts and you're sending out these swipe trades? What I like to do, I like to look at things at a bigger picture, always. I like to look at the bigger picture. Don't get me wrong, guys. Scalping the market, getting in, getting out, that's awesome, right? I look at that as like robbing the bank, right? Robbing the bank, scalping. It's awesome. But the thing about scalping, right, and robbing a bank, it gets what? Very emotional, right? You get very like, oh, you're up 5, 10 pips and you're just pipping and dipping, right? But you kind of get in your emotional state, right? You kind of get a little nervous. You kind of get overwhelmed in a sense, because you're like, you're stuck in a trade because you realize in your head, oh, you know, I'm going to get in this trade for 10, 20 minutes and I'm going to cash out a few quick bucks. It ends up going and profiting, and then it goes down. And then you're over here, you're confused. You're like, oh man, do I stay in a trade? Should I scalp it? Should I swing it? Right? Why put yourself in an emotional state when you can, one, look for the profitable setup. 2, look for the long-term setup. 3, right? And 3, maximize your pip count. It's okay to catch 10, 20 pips, but why not catch 30 to 50 every single day? For you guys that are on this call, if you do not have a plan of how many pips you're catching a day, we're going to get a plan today. Okay? So what I do, I look at the daily time frame. It's safe to say that AUD/USD is on a decline, right? It is going downtown. So what I like to do, I like to look for my trend. So what do? I look for the highest point of the market, and then I look for the lowest point of the market. I grab my trend line from the high, drag it all the way down to the low. As I connect to the future, right? It's safe to say that every time the price hit the trend line, it dropped, right? What some people don't know is that there's a way of trading just by looking at the price, touch the trend line, and you're selling it. Does that make sense? So what I do, right, as I zoom in, I got a high that was created here, right? Then I have a low that was created here, right? This is what we call, ladies and gentlemen, support and resistance. As I look at the 4 hour and the 4 hour and the daily, right? I'm gonna show this as clear as possible, right? This is a support level. This is a support level. Price came to the support, it bounced, consolidated. What did it do off the support level? It broke out, right? It broke out fully, broke out of the support. Everything that is broken out, ladies and gentlemen, on a higher time frame, any key level of support that is broken out must be retested, always. Price broke out, it comes back to the same exact support, right? Because look at this. History repeats itself every single time. Why is it that where price came here and bounced, for some reason, in the future, it came back and then it sat on the same level and then it bounced again. But then it broke out of that level. As it broke out of that level, it tested it, right? Breakout, retest. This is the thing, guys. You can sell right here, right? You can sell as soon as it hits support. But why sell as soon as it hits support when you can catch the perfect entry with no drawdown? Meaning you get into a trade and you're automatically positive, not negative. Does that make sense? On a 4 hour, right? Look at it. Breakout, it comes up, retests, right? 7200. An even number in the market helped me identify a key level of support. And in order for me to get into that trade of a breakout, I have to look for that retest. And that's exactly what happened here. Breakout, retest, boom. I sell at the retest. Sell at the retest, take profit at the nearest support. This could be right here off this wick from here to here. This could be the low, right? Because price came here, rejected, 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 rejected. And look what happened, right? It came, it broke out of that zone, retested that zone, and it created a same support here, right? Because it came here, bounce, 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 bounce. It broke, right? This was the breakout. It kept bouncing and bouncing, but then it came back up for the retest, right? You see how that level of support, right, plays a big role here, and then the future, it plays another role here, and then boom, boom, so on and so on. Remember that every key level is gonna play a role, but every key level that is broken out must be retested. Look what happened. Breakout, retest, I enter here, I take profit right here at this level. I can take profit here, 30 pips. Right here is 30 pips from this high to this low. Remember, if you sell resistance, if you sell at the high, take profit at the low. Sell at a high, take profit at the most recent low, right? Breakout, retest, I sell here, I take profit here, 30 pips, or I can take profit here, 100 pips. All right? You look at structure, right, on a daily. History repeats itself. This hole right here is important. It's important. This is important because what happened before ended up coming back to that level. So if I would have sold right here the breakout, all I had to do was zoom out to the daily time frame and tell myself, okay, this is another support level. I'm taking profit right here. That's exactly what happened. I sold here, took profit here. 100 plus pips on a higher time frame, ladies and gentlemen. Right? Now you ask yourself, how can I find another setup just like that? Well, I go to the daily time frame, right? This zone is still important to me. Still important. Every time price came to the what? To the trend line, it reacted and then it dropped. It came back, wicked it, reacted, and then it dropped. How could I get into this trade right here? I go to the 4 hour. Okay. Remember that zone, that support, right? Breakout retest. What happens here? Price came to the same level it broke out, right? Came here, and then it rejected. Boom, rejection. Come down again, and then boom, again, it rejected. Rejected, rejected. If this would have closed above, then gone bullish right here, then I would have bought. But what did price do? It comes back down to the previous support. Look, it's all market structure, ladies and gentlemen. Look at that. You can sell here, take profit here, just like you did here. But what happens here? A change of what? Trend, a change of direction. Price went bullish, right? The key level is 72000. So what price tended to do was break above, right? The 4 hour. And you can see right here, 4, 8, 12, 16. 4, 8, 12, right? 12 hours in order for AU to break bullish engulfing right here, then continue to the upside. So what do, right? Just as you catch the breakout retest on the sell, it's the same exact thing on the buy, ladies and gentlemen. Wait for price to go above that key level, close above, retest, same level, get in on the retest, boom. Right? As you buy here, take it to the structure point, right? Take it to the structure point, right? Every time price came to the trend line, right? It dropped. So what I do is I buy here and take it to the trend line. That's an overall 100 pips, 100 pip plus move on a higher time frame. Because all I did was wait for price to go above, right? All I did was wait for price to go above the key level of 7200, right? Close above, and then look at this this bullish engulfing candle. This right here is giving you the confirmation to get into the trade. Why did this candle close above these 3 prior candles? 4, 8, 12. Right? It closed above and then it tested, but then it went bullish. The next candle went above the previous candle. So when that happens, that's a bullish engulfing. That's a green light to be like, Miss Tracy, get into this trade right now. Bullish engulfing, it closed above, right? Already retested. It already closed above the key level. I'm buying it. 100 pips to the upside. So if you were going to buy here and take profit at the most recent high, right? The most recent high is right here. Right here. So if I buy here, I take profit here, that's 30 pips, 25 pips. You can catch that 30 pip move, but look, you can catch 50 or you could catch 100 looking at the long-term trend. Now, this is AUD-USD, right? The slowest moving pair in the market. If you guys didn't know that, you can write that down. The slowest pair in the market. Now, look at this, guys. History tends to repeat itself every single time. The same support that got broken out and retested on the buy and the sell side is going to do the same thing. Look what happened here, right? The same support level is still there. Price comes down to this support. What happens? It rejects, right? It bounces. It's safe to say that some people are going to get into the trade right here, right? They're going to be like, oh, it's at the support again. I'm going to sell it because it's going to break out. You sell it, but guess what happens? Price pulls up, right? It puts you in a little bit of drawdown, 30, 20 pip drawdown, right? You sell here and then boom, price starts going up, right? Price starts going up. 4, 8, 12, 16, 20, 24. This is a 2-day period of this price sitting at this low in order to catch the breakout. Now look at this, right? Anybody that knows, right, off this support, if it goes and creates another high at the support, right? This is an M formation, right? You see the M here, 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 and here. Anybody that knows market structure and market patterns know that we sell at the right leg of the M. So if you would have sold right here at the high that was created, you would have been good money because you would have sold here, took profit here, 30 pips, right? From this high to this low is 30 pips, right? You could have caught the whole move downward, right? Because if you sell resistance, you're taking profit at the most recent support, which is right here, because this is the recent support. Does that make sense? Sell resistance, take profit at support. So what happens, right? Let's say we missed the entry up here, right? We missed our entry. Remember I told you guys, breakout retest? Look at this, I can't make this up. This 4-hour candle went bearish so bad, it probably had a lot of people selling, clicking the sell button. But no, not me, because I'm patient. Look what happens. The same key level broke out, bearish. Some people are gonna sell right here. Right here. But look what happens. Every key level that's broken out must be what, people? Retested. And that's what happened. The beauty of trading comes right back to this key level. And look how perfectly it hit it to the T. Look at this, 72000. I can't make this up. It literally hit it to the T. So as you go and enter off the breakout retest, boom, your entry's here or your entry's here, right? Let's say we entered here, right? We're in profit, boom, 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 and we know the retest is coming. If I can sell up here and I know the retest is coming, right? Right here, I'm gonna sell again, right here. So not only do I have a sell up here, but I have a sell right here. Breakout retest. Look at this support, guys. You see how it comes here, right? Breaks out, I mean right here, breaks out, retest, drops, but then it comes here, it rejects, sits on the level, then comes down, then goes to the same key level, closes above bullish, retests, and then continues the trend. Same thing with here, AUD/USD. Came to the support, sat on the support, broke out, and then retested, and then you sell it, take profit at the support. Most recent support. It's all about trading from zone to zone, guys. That's all it is, right? Key market structure. That's all I do. That's all I trade. Now you ask yourself, how can I find different ways of confirmation? Well, you have Fibonacci, right? We all know Fibonacci is a very key tool to use. You know, if I was to use Fibonacci on here, you know, I could find multiple confluence points, right? Right here, it's sitting on the 50 of the fib. Right here is the 50. Right here is the 61. At the end of the day, I'm going to trade market structure. So if the 50 sitting right on the key level of 7200, that's just giving me confluence, like retracement, high to the low, right? Fib from the high to the low, wait for the retracement to a key level, 61 or the 50, and I caught it right off the 50, off the key level, and then boom, took it down. All right? Simple stuff, but at the end of the day, I'll tell you guys this is exactly how I trade. I sit on my hands and I wait for these trades to come, right? Instead of just getting in on impulse. That's the thing about trading, guys. You have to sit on your hands. You have to be patient, right? You have to be able to wait on these setups. All right, this past week, let me show you guys. We took some L's on swipe trades. And I'll be honest with you, and I'll be the first to tell you, swipe trades has not been all sunshine and rainbows the past 2 months, right? We're going to take L's. We're going to go through those rough stages, right? This right here, I don't know what happened to the market. I don't know what happened to the market, but I used what I knew, right? And it didn't go, right? My analysis didn't play out. You look at the confluence point here. We see a downtrend, right? Caught everyone off guard, I'm sure. That's the thing. It's not just swipe trade. It's a lot of people that stop losses have been getting hit. The market's just been, the thing about it is a lot of you guys don't know, It's market conditions are changing, meaning the markets are going to start trending a lot more. That makes sense, which is a good thing for us. But this is what I did, right? I see an obvious downtrend, right? Downtrend, right? Downtrend, right? The pullback, downtrend. You look at it here, pullback, right? Downtrend, right? You see a downtrend all over. And you look at the 4 hour, and you look at the daily, right? Downtrend, downtrend, downtrend. But what I didn't pay attention to is that this key level, right? It rejected, right? We look at the 4 hour, rejection, 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 rejection. But I did not pay attention to this 4 hour going bullish. Look at this 4 hour candle. Remember how I showed you on AU how it goes bullish, like right here, right? Bullish. Look at this. That candle goes above the previous candle. That's exactly where Euro AUD did. It went above it, and then it broke the zone. Look at the zone. As I go to a lower time frame, look at this here, right here. Breakout, and then it retested the same level right here. Broke out, right here, and then it went to the moon. I didn't think that move was going to happen. I sat on my trade. I was like, you know what? I'm not going to get emotional. If my stop loss gets hit, my stop loss gets hit. It is what it is. All right? And that's the thing. My confluence points were right here, right? Look at this. Breakout right here, right? The breakout of the zone. It has to retest the zone. 61.8. The trend line, bearish price action, meaning that it's in a downtrend. That's 4 confirmations already telling me that, hey, let's get into this trade to the downside. But all it took was a 4 hour candle of transitioning the trend, closing above bullish, retesting, and then going to the moon. It went up literally 160 plus pips from the prior entry of where we entered at 617. So guys, at the end of the day, I learned from this. I learned that on a 4 hour, right, I should have paid attention at the breakout and the close above that went bullish, right? I have to pay attention to these things. So understand at the end of the day, not every single trade is going to hit, but analyze in every single way possible, right? GBP AUD, believe it or not, I called out this, well, I didn't call it on swipe trades, this sell limit right here, right? Price came here. Let me show you guys. Fib from the high to this low, right? Price literally came to the 71.0 to 61.8. Right? I fell asleep, man. I was so mad. I fell asleep on my laptop, on my bed, waiting for this move, right? GA was literally like right here. And it came back down. And then literally, I was going to put a sell limit at the 61.8. Look what happened, guys. It literally went up, grabbed my order, activated it, and then it literally hit 50 pips for TP1. And then, boom, TP2 hit for 100 pips. That was supposed to go out this Monday morning. Reason why I didn't go out is because I fell asleep. But it's okay. I was just flying in from New York that Sunday. So imagine trying to recalibrate time zones from the East Coast to the West Coast. Trust me when I tell you I fell asleep at the wrong time. I fell asleep at the wrong time. But guys, every single trade that you think you're going to catch, you're not always going to catch. Look at this. Perfect setup, right? It activated my order, boom, TP1, boom. Because all I did was sell at the high and take profit at this low. Sell resistance, take profit at support. If I buy support, I'm going to take profit at resistance. And look what happened here. Price came here. It actually created a pattern here. Let me show you guys. It actually created a pattern here. And you look at this right here. Let me show you guys. 3 touch to a trend line. 1, 2, 3. That last touch, it went to the moon. That's a price pattern. 1, 2, 3. If you see 3 to 4 touches on a trend line, it's either going to break or it's either going to bounce. Most of the time, you look at this, you see what? Uptrend. Uptrend. If you see an uptrend more bullish than bearish on a 3 trend line bounce, buy it. Right? You could have bought here, boom. Or you could have bought here, held the trade all the way through, bought again, held the trade all the way through, then buy again. You got a buy position here, buy position here, buy position here. And then, boom, it takes off 500 pips in 1 week. GA did this in 1 week. From this low all the way to the high, GA moved 500 pips. Look at the daily. GA is at a 2-year high now. That is crazy to me. All right? But we're going to leave GA alone. Sole reason because it's one of the craziest moving pairs in the market. All right? But as you guys can see, I'll show you my mistakes. I'll show you what we're wrong, what we're right at the end of the day. Right? What else I want to do? I'm going to go over one more chart and I'll open up the mic, Ms. Tracy, so everybody can ask some questions. Let me see. I had this UJ. Yeah, this UJ, it played out lovely. Lovely, 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 lovely. Show you guys this. We all know UJ has been in Hulk mode, going crazy to the upside. But what I was basing UJ off was the weekly. Okay? The weekly time frame, right? What I like to do is use my Fibonacci levels, my fib, from this week's high to the most the most previous low on the weekly, right? My 1618 is at the 118 level of resistance, right? 114, ladies and gentlemen, is the key level that I was paying attention to. 114, okay? Off the weekly time frame, right? I'm looking for a bullish move, right? Just like I told you guys on AU and all these other pairs, right? If price goes above and closes above, what are we going to look for? The retest. Look for the retest. Take it to the previous resistance. I mean, the most previous high, which is up here. All right. Breakout retest of 114, right? Because this is a key level of resistance. Every time price went to that resistance, what happened? It went up there, it dropped. It went up there, and then it dropped, right? But look what happened here. It came here, it wicked it, and then it dropped. And it's literally sitting right at that level, 30 pips away from 114, right? You look at the daily, look at the 4-hour. Price never closed above, right, on the daily. That's when you know you're looking for that breakout retest. But look at the 4-hour, right? Price came here, went bullish, right? It came here. It didn't retest the way we wanted to retest. But look what happened. It came back down below 114, and then it retested it to the downside instead of retesting it to the upside. So if price was to do this, right? If price came down here and then it rejected and then did this, then yes, we're going to buy. But look how price came below 114 right here, closed below, and then retested it. What price pattern, what market pattern do you see here? If you know what pattern I'm talking about here and you see it, drop it in the chat. Yup. Head and shoulders. Head and shoulders is one of my favorite market patterns in the market. Because every single time, if this holds the shoulder off the 50 right here and the 61.8 here, which exactly that's what happened. As you can see, it came to the 50, right? It tested the 50 and then it dropped and then it tested it one more time and then it dropped drastically, right? If you can find the right shoulder sitting off the 50 of the fib and a 61.8, you're going to catch that move. You're going to catch that move. It does not matter. You're going to catch that move. As long as it holds that right shoulder, you're going to catch that move. But my overall move is I'm looking for this here, that close above 114 and then that retest. I want that beautiful retest on a lower time frame, right? Let me show you guys. Off the hour, this right here, breakout, and then I want to have that beautiful retest of just that reaction off that 114 level. And then when that happens, finding that breakout retest at that level, basing it off the weekly, I'm going to take it to 118, which is this previous resistance. So in order for us to find this buy bullish, we have to wait for the breakout retest. That's it. Now, if it stays below 114, okay, awesome. We're going to keep looking to sell. Because if it comes back up to 114 here, it rejects, right? And there's wicks like this right here. See how it just wick. If it keeps doing it at that level, start looking for sells. But if it goes above 114 and if it goes up, closes, rejects, and you see no sign of it under the key level, you're going to buy. Because look right here, the same thing here, rejection, sell, 40 pips. Same thing here. It'll come up, come here, rejection, boom. Because that's the thing. It'll have you sitting in this trade right here. And people are either buying or selling and they don't know what. But if you understand key levels, it stays below that key level, sell it. Stays above that key level, buy it. Simple stuff. Simple stuff. So what I want to do, I want to open the mic up to everybody, but I'm going to give it back to Miss Tracy.
All right. Well, I'm telling you, guys, listen, I don't know how much more simple one can make this, right? I mean, bottom line is you wait for the break and you retest, right? You know your fibs, you got your key levels, 50 and 61.8. You guys got that. And you got to know your support resistance, right? You got to know your support resistance. You trade from zone to zone. All right. So now here's your chance to ask the questions that you want to ask while you have the opportunity. I don't know, Gustavo, if you want to stop sharing your screen or if people are going to ask questions in reference to the chart, but either way is cool. So guys, go ahead, unmute and launch them at Gustavo.
Yeah, feel free to ask any questions, guys.
Hey, Gustavo,
Hi,
I have a question.
Yes.
Yes, I noticed that you were setting your support and resistance. Well, you were going from, different time zones, the daily, the 4 hour, and then you mentioned something about the 1 hour. Are you setting your support and resistance at what, the daily or the
Daily and 4 hour.
Is that generally what you do?
The daily and 4 hour, always.
Okay. And how do you determine which one? Do you do both?
No, yeah, I look for the key level on a daily. I look for daily key levels, and then I look for 4 hour key level. That makes sense?
Okay. Okay. Thank you.
No problem.
Thanks, Gustavo. This has been amazing. And it makes me feel a lot better now. GA is my pair, and I think I hate it. I was in that trade, and I was in profit, and then I went to bed because I'm in Australia. And then I got up and I went, what the hell are you doing up there? You're supposed to be going the other way.
Right.
What is going on? And I lost big time, and I went, oh, shoot, I don't like him.
That's what I said. I woke up, I was like, yo, what happened?
That makes me feel a lot better now that it wasn't just me.
Yeah, that's the thing, there's a lot of things going on in the market right now that a lot of people haven't been able to see. But as you know, we're always going to take losses.
Yeah, that's good. It's great.
Awesome. You know what's kind of crazy, Miss Tracy? Most of the time, some people don't have questions because it makes that much sense to them. So that's what I really like about this. So if it made a lot of sense to you guys, drop a number 7 in the chat for me. And what I want to do right now,
well, I have one question though for you. What I have not been that clear on was the significance, and you dropped a gem on it real fast, and we got off of it, but the significance of the even numbers. Like when I'm drawing my line, my support resistance, it'll usually hit my level, but I don't know how to reference that with even numbers versus just where I think the support level or resistance level is. So can you talk a little bit about that?
Yeah, so with key levels, right, the even numbers are always just going to give you a psychological meaning of that structure, if that makes sense. It depends on what currency pair you're exactly looking at. There's certain levels that have psychological levels, but if you can find a key level, right, a key level with an even number, that means you're on the money. Always remember, even numbers are better than odd numbers. Always. The more key levels you find with even numbers, the more you're better on track. What I just dropped in the chat, ladies and gentlemen, is actually one of my trainings. I dropped it about, I think maybe a month ago. It's actually a London 101 training, trading live, going over a little bit of this and a little bit more into detail with things. So for you guys that want a little bit more hands-on training, just feel free to click that link in the chat, guys, or go to my YouTube, subscribe to my YouTube. And with that being, guys, I'm dropping literally free value every single time on my YouTube. I got trainings. I actually have the 3 key mindset webinar on there. I have the free Forex training I did. I did a lot of free Forex trainings on there that I teach my strategy on. So I want you guys to understand I never hold back. I don't charge people for my strategy. I don't charge people for my time, only if they want one-on-ones, of course. But guys, literally, if you want the knowledge, you want what I know, go to my YouTube, take advantage, check out whatever training it is that you might like best, and just give me some feedback, guys, because I'm actually working on some more content right now so I can start sharing with everybody in IML. But overall, I see you guys like it. I'm gonna drop it in the chat one more time. And like I said, it's pretty a good thing that people don't have a lot of questions, because I make this crystal clear. I like to really just, sharpen everybody up at the end of the day. So I hope you guys took some note on this. But overall, guys, since I have you guys here, I want to talk a little bit about swipe trades. Like I said, the past few months or so, swipe trades has not been so up to par. But our guys need to understand that, the team that we have, the people that we have behind this platform are literally the best of the best, have been, gone through the trials and tribulations of being a real trader, a professional trader at that. And don't get me wrong, guys, we are going to take L's in this profession. And all I ask is for people like yourself is to do not lose hope in swipe trades, right? If you support me and you like what I do, support the fact that swipe trades is going to be here for a long time, because we're not going anywhere, guys. I'll tell you that right now. So just know, me, myself, the team, we're doing everything in our power and will to get on these charts, to study as much as possible, to make sure we are sending you guys out the best of the best trades. Because I'll be honest, let's say we don't have swipe trades, there's going to be some people that are going to be looking for trades, and, they're going to be bugging other people, where you have that product swipe trades with that alone right there, right? That alone can give you a little bit of boost, can give you that compound, that can give you that push to understand that, hey, you do have some trades that you can take, instead of just having to wait and wait and wait. So just know, guys, that swipe trades, we're about to revamp a lot of new things. We're actually going to have Swipe TV coming out as well. So imagine you guys being on a session like this, and I'm giving you swipe trades live, right? That'd be pretty dope, right? So just know, guys, stay tuned. We got some big things coming. I'm actually going to make my way out to Atlanta real soon. Hopefully me and Miss Tracy can do a big event. So if you guys are out there, be more than happy to link up with you guys, and, we'll do free Forex training in person, the whole 9 yards. But overall, guys, you guys know here at IML, we're here to enrich, empower, and educate 1 million lives by 2020. And me, myself, I'm doing everything possible in my power and will to put swipe trades on my back, because there's a lot of people depending on me, guys. I don't do this for the money. I do this for the people, and I do this for you guys. So once again, blessed and grateful to be here. Miss Tracy, thank you for giving me the honor and the time to get on here to teach your team. Hopefully you guys took some notes. All I ask, guys.
Plenty of notes.
Tracy, I have one quick question.
Yeah.
Look, he sensed you were trying to close out, Gustavo. He's like,
Okay, Mr. Gustavo, I appreciate you, because I've learned a lot within a short amount of time. But I just got one question in terms of you learning and everything. So when did everything really begin to click for you, where you said, well, you know what? Now it all begins to make sense for me?
When I started seeing my profits just compound, when I started seeing my trades hit, right? I started seeing my stop losses getting hit, but when my trades started hitting, and then that first withdrawal hit, I remember it was a $400 withdrawal. that's when it clicked, right? When the money hit my account, it gave me that belief. So understand that it can click for you. It can click for you in a few weeks. It can click for you in a month, 2 months, 3 months. The thing with me, my situation, right? I don't know about you guys. I was broke, busted, disgusted, living at my mom's house, right? And I had no type of guidance of any way, and I didn't have no way to make money. So I put a lot of time and energy into this. It was either Gustavo learns how to trade or Gustavo goes to the streets. And Gustavo didn't want to go to the streets. Does that make sense? So I tell you this, if you put a lot of time into this could click for you very quickly. But at the end of the day, it's at everybody's pace. But I tell you, I'll give it about my second, third month in, because that's the thing with me. I didn't learn with a demo. That's the thing a lot of people don't know. I learned with a live account. I literally used to get paid guys $500 every 2 weeks, and I would put $250 into my account, and I'd build it from there. So, I'd say about my second month in is when, third month, it really clicked for me. Started making, a few hundred a week at that time.
Okay, thank you. I appreciate that. So now I'm kind of under the gun to just go and open up that live account, and I'm gonna do it too.
Let's pull the trigger, baby.
Thank you. I appreciate you, bro.
I
Cool.
have a quick question too.
Yes, ma'am.
It kind of piggybacking off of Johnny. How would you set an expectation for a person who works a 9 to 5, who trade, and who wants to work their way off the 9 to 5 on a 0.01 account? Like, what would be a realistic expectation, provided, of course, they're diligent, studying, doing everything that they're supposed to do, but just that gradual buildup? What would be an expectation time-wise for an individual to say, okay, I see this money growing, and I can see actually transitioning?
If you're making more money than your job, once you double your money, once you're making more money trading than your job, that's when I'd pull the trigger. That's just me though.
Right, but on a 0.01, that can be a minute.
But this is the thing. Look at your account growth. You build 0.01 from $100 to $200. Once you get to $200, you can trade 0.02, 0.03. So the more your account grows, that's when you can up your lot size, right?
Mm-hmm.
You don't have to trade 0.01 for the rest of your life. The only thing that changes in trading is the lot size. That's it.
Mm-hmm.
So with that, in order for your lot size to change, you need to grow your account little by little. So 0.01 for every 100, right? Me, once my account gets to 200, I'm going to put 0.02 or 0.03. Now, in order to be able to compound your account, you need to do some math. You need to calculate how many pips you're going to catch and exactly what lot size. Because with a trading plan, I'm sure probably you've seen it, right? You see the crazy trading plan, day 1, day 2, day 20, right? That's real. Imagine if you really compounded your account in 3 months from pennies to 10 cents to 20 cents, right? That account is going to grow.
Right.
But you have to what? Trust the process.
Mm-hmm. Mm-hmm.
With trusting the process, your account will get to that point. So just imagine you're working your job, you're compounding your account, and your account grows to 10, 20,000 part-time while you're working your job. You have a decision to make there, to either walk away and live off your account or still compound your account. Make sense?
It does. Because I see trading plans that start off with 100 or 50, what have you, but the lot size is more than 0.01, and so that would be considered risky on $100 account.
And this is the thing. Understand this. Sometimes you have to take a risk. Sometimes when there's a trade that just looks good to you and all your analysis just play out, you got all your key, all your confirmations, right? There might be that one time when you might have to put a lot size a little bit bigger because you just know, and then it ends up playing your way, and then you end up making more money than you expected. That's the only time I ever get risky on these charts, is when I have 5 confirmations, right? And right at the right time, right? It's hitting my Fibonacci, it's hitting the trend line. If I just know I'm getting to that trade, and I might risk a little bit more than what I have. So if I had, you know, $100 account, right? I might put a 0.03 and catch 50 pips and make $15, right? That's $15 I didn't have. I do the same thing tomorrow, that's $30. The same thing the next day, $45, right? It's all about compounding your account. So remember, at the end of the day, it's not about catching every trade, it's about catching the best trade. Remember that. Because catching every single best trade will help you compound your account, build your account, and then up your lot sizes. I remember I was trading penny lots. I remember, I was trading 0.10, and I looked at them as standard lots. I was literally catching 50, 100 pips every day, making 50, 100 bucks. When that started happening, my subconscious was telling me, okay, keep doing it, keep doing it, keep doing it. Eventually, you're going to get to a standard lot. And that's what happened. I ended up bumping up my lots little by little, little by little. And don't get me wrong, you know, you're going to learn. You know, you're going to be in drawdown on a 0.20, 0.10, and it's more drawdown than it was on a penny. Like I said, it's all just mindset, psychological. That's all it is. But I tell you this, as I said, trust the process, know where you're trading, and look at your risk factor. Use proper risk management, right? I don't get me wrong, you know, I flip $500 accounts to 2,000-3,000 every single week like it's nothing. But I tell you this, my style of trading, I'm very risky as well. I'm willing to risk $500, right? I can go put $500 in an account right now, risk the biscuit, and if I lose it, I'm not gonna have no emotional attachment to it, right? Some people will lose that 500, be like, oh man, I can't go to work tomorrow, or I can't pay my rent, right? It's like, why risk it when you can use proper risk management and you don't have to get in your emotions?
That's right.
But just stay focused, just keep compounding your account, and just as you see your account grow, then up your lot size.
Mm-hmm. I appreciate it. Wealthy Pips in the building. Thank you.
So can I just ask one more question, Gustavo? When you say look for the best trade, so I've been concentrating on one pair, and there's a lot of these other trades that come out. Everyone says, oh, trade this or trade that. Should we look at all of them when we start to trade, or should we just stay with the one pair that we're trading with?
As a new person, as somebody coming in new, I tell them stick to 2 pairs. And those 2 pairs that I started trading with was, I'll tell you this, Euro USD and USD CHF are the 2 main pairs I recommend to every new person.
So Euro USD, and what was the other one?
USD Swiss franc, USD CHF.
Okay. Great. Thank you very much.
Hey, Gustavo. Brian here. So I first and foremost, I just want to say the chart markups you did were just absolutely those are beasts. When it comes to the Euro AUD chart, the one that was in a downtrend, markup was pretty awesome. And I was looking at like TradingView and seeing that there was a ton of similar markups the same way. Everyone was looking to short it when it kind of burst up to the upside. I also noticed, like, if we went up to like the higher time frame, like to the monthly chart, it's now hanging at that resistant or that point of resistance area from where it hit in the past. And so what I was wondering was, I also noticed that you're always looking at the 4-hour and the daily chart, and then it looked like when you move up the time frame, is there a time that you look at the monthly, and does that affect your trading style or your trading plan?
Not really. Not really. I really don't pay attention to the monthly. Sole reason because the amount of pips that I'm looking to catch on each pair is 50 to 100 in a week. So if I'm looking to catch like a multiple hundreds of pips like this, then yeah, I would pay attention to the monthly or the weekly. Just as like I showed on USD/JPY, right? The weekly time frame, right? It shows right here the breakout retest that's possible. That's over 500 pips. So with, as you say, about Euro USD on a monthly, that's would be considered swing trading. Me, I'm more intraday swing, but that's like a mega swing trade, if that makes sense. right? That's like 500, 600 pip moves. But me, you know, I like to stick to the 4 hour and a daily and a 1 hour. That's just me.
I appreciate that.
No problem at all. No problem at all.
I have a quick question. If you have a small account, like, well, I had a $200 account, it's down to 100 now, Gustavo. So if you have a small account, is it a good idea to do like like long term, like uh
Long-term.
intraday versus scalping,
Yeah. Yeah, that's the best way to compound your account. Like, honestly, like, I would not scalp on pennies. I just wouldn't. I feel like it's a waste of time. I'm just being honest. Because
Okay.
catch 10 pips on a 0.01, you made $1.
Right, exactly.
It's
Yeah.
like, why hold it for 10 pips when you can catch it for 50 to 100 pips? Swing it and you make $5, $10. You know. So with pennies, if you're trading 0.01, 0.02, find every possible way to swing trade if possible.
Okay.
You know, catch your intraday. Let's say you catch your 30, 50 pips for the day and you have maybe 2 orders in. Secure your profit on 1 order. Let the other orders ride out. Put your stop loss in profit. If you put your stop loss in profit, right, what is bound to happen? It's either going to hit your stop loss and you get out with no loss, or it's going to keep going and compounding your account.
Okay.
You know, there's sometimes, I'll never forget, a few people, they get into a trade with a few pennies and they held the trade for weeks and they're up $10 on a penny. That's 100 pips. So at the end of the day, with trading pennies, I wouldn't scalp.
Okay. Yeah, I think that's been my problem, because I'm jumping from pair to pair, trying to get these little 10 pips, and then I wind up losing some, winning some. I don't know. It's just, yeah, like you said, it's becoming a little too emotional. I need to kind of remove the emotion and just be more diligent and systematic about everything.
Yeah, be patient. Wait on the setup to come to you and look for get into the more profitable setup instead of just trying to find the quick pip dip, if that makes sense.
Okay. Thank you so much.
No problem at all. Any other questions from anybody?
All right, guys. Well, I think we have tapped out, right? I mean, we did a good hour here, which was amazing. And Gustavo, I mean, your style of I'm really looking forward to you having your own channel, because I'm just gonna tell you nothing.
I'll tell you this.
I'm just say this.
I'll tell you. Hold on.
I look for you on Swipe Trades. I look for you. Okay.
I'll tell you how this. If y'all, we can push for me to have a channel. I just need y'all to make a post. Miss Tracy, you make a post and have everybody in this chat drop a comment on that post. So make a post.
Okay.
Be like, Gustavo for IML TV.
You got a campaign, man. We need your campaign poster.
Y'all make the post. I'll promote it. I'll tag whoever, and maybe you guys will maybe be able to push me to get to IML TV. Who knows? It's all on you guys. So if you guys want me to make it happen, help me. I'll help you guys out.
Absolutely. Your teaching style is amazing, and we know that your trade setups produce, and that's why I think there's so much demand for seeing you in a different light, because you're kind of behind the scenes, right, from a swipe trade standpoint. But you get on IML TV, now people can start to think like Gustavo, right, and get going. So I really appreciate you so much. I thank you. Stop sharing for a second so I can make sure everybody is good and nobody has any final say. So did you guys get some good value from Gustavo tonight? Thumbs up? Yes? Everybody's clapping? All right, good deal. So guys, we're gonna go ahead and close out. I'm so excited. I'm grateful that we have completed our virtual trading summit. We had an amazing time this week. We'll put up virtual trading summit 3 together, right? Maybe for the spring. And it's going to grow, guys, right? This is going to grow and grow and grow. It's going to be one of the most amazing things that we can do focused on trading. So Gustavo, we appreciate you. Thank you. Thank you, brother. Anything you need from us, please do not hesitate to reach out. And we look forward to hanging out with you and everything on Gustavo TV somewhere sometime soon.
Thank you guys. I appreciate y'all. I just dropped my Instagram on there. If you guys want to follow me, Wealthy Pips FX. Feel free to follow me, guys. Yeah. Thank you once again, guys. Let's take IML to $1 billion.
Let's do it.